Hello everyone. So February 2026 numbers just dropped from Toronto Real Estate Board. And I have to be honest with you, there are some really interesting things happening in this market right now that I think a lot of people are missing. Yes, prices are still down year over year. Yes, sales are still soft. But here's the thing, something actually shifted between January and February that tells me we might be at an important turning point. And I want to walk you through all of it today. We're going to cover the big year-over-year numbers, the month-over-month momentum, and how each home type is performing, what's happening in different parts of the GTA, and then at the end, I'm going to give you my honest take on what buyers, sellers, and investors should actually be doing right now in this market. By the way, this video is part of an exclusive collaboration with top real estate YouTubers from across North America. We're each breaking down what's really happening in our local markets. The stuff you won't hear on the evening news or read in a generic market report. Make sure you check out all the videos linked below. These aren't random creators. These are people who know their markets inside and out. All right, let's get into it. So let's go through the headline numbers, right? So February 2026 versus February 2025. Year over year, total sales came in at 3,868. Transactions down about 6.3% year over year. This is from the same month last year when we had about 4,127 sales. So fewer people are buying right now, and that's clear. Let's look at the average price. Average price landed at almost $1,009,000, just barely over $1,000,000, and that's 7.1% below last year, February 2025. Last year, average price was $1,086,586,000 in February 2025. So if you bought the average home a year ago on paper, you're down almost $77,000, and that stinks. Now here's the number I want you to pay attention to. New listings. New listings dropped about 10,705, right? And that's almost like 17.7% decline from last year when we had about 13,000 new listings. Think about it, this means. So sales are down, yes, sales are down 6%, but listings are almost down 18%. So that means that sellers are pulling back, right? They're pulling back from the market way faster than buyers are, which means that's kind of like eventually gonna have to stabilize the price, right? And that's actually building a floor on the prices, right? So by the time sellers are not like just flooding the market, because you're not gonna really have a real price crash if there is no supply flooding the market. In terms of active listings, we can see the total numbers for sales right now came in at about 19,314. That's down slightly from last year. Average days on the market is about 36 days, up 33% from 27 days last year. So homes are sitting longer, which means buyers have more time and more leverage that they've had in years, right? So everything is moving up like 33%, and days on the market is up. And the other thing that I want to mention is sales to new listing ratio, right? Sales to new listing ratio is sitting at 33.6%. So essentially anything under 40% is officially a buyer's market. So we're firmly in the buyer's market territory. And so what does that mean? That means that like out of all the new listings, 33% of them are selling. So let's go to the slide 2. Slide 2, we're looking at this part that's the part that I really want you to see and pay attention, because when we look at January versus February month over month, the picture looks a lot more interesting. Sales jumped from 3,082 in January to 3,868 in February. That's almost a 25% increase. So in just 1 month, that's a significant bounce. So we're seeing buyers are slowly entering the market. We're looking at the average price. Average price went from, in January, that was $973,000. Now it went up to $1,008,000 in February. That's about $35,000 increase, right? And then so we can see that we're crossing back over the $1,000,000 mark again. Now, let's look at the days on the market, right? For days on the market, we're seeing that in February, uh, in February, days on the market are 36 days, and in January, there's like 45 days. So again, so we're seeing that properties are moving slightly faster, right? And then same thing here, on average days on the market, we're looking at 54 days in February versus 67 days in January. So again, part of it is seasonality, right? So usually February always busier than January in real estate, but the magnitude of that jump is worth noting. The other thing is interesting is that the new listings, right? So the new listings barely moved, down just 0.6% from January. So listings are flat, but buyers are coming back. And that's what you want to see if you're watching for early signs of a market recovery. Is this the start of the spring surge? Well, it's too early to say, but the direction, it looks like we're going towards the right direction as the listings are shrinking and buyers activity are coming up. So let's move on to slide 3. Okay, so let's just break it down by home type. So we're seeing here detached, it's 1,326. It's actually dropped 8.2% year over year. So if you look at here, the detached and condos are dropping the most, right? It is a couple of things. Condos, we know why condos are suffering, because condos have been just not doing well, right? Especially a lot of micro condos, right? And that brings the average down. And then in terms of the detached was doing well for since like last year, right? Like it was holding the prices steady. But ever since last year, we're seeing more pressure on prices in detached. That's why we're seeing the big jump. 8.2% price year over year that went down, right? In terms of the sales are down 3.9%. Semi-detached, we're seeing sales are down 9.2%. Townhouse 2.4%, and the most is the condo apartment, which are down 12%, right? So that's pretty significant price drop, like sales drop for condos, right? And then average price by home type. So again, like you can see right now, detached, we're still holding steady, right? 1,325,000. Semi is 1,027,000. Townhouses 844, and condo apartment is about $626,000. And then just again, let's just kind of comparison of like sales volume, right? February 2026 to February 2025. We're seeing that the detached year over year, we've had about 3.9% change, semi 9.3, and condo 12%, and townhouse 2. So condos have had the largest sales decline of 12% and largest price drop. So again, based on what we're seeing condos still are doing the worst out of all type property types. A lot of it again is just because it's the wrong type of products are in the market, right? So now let's go to slide 4. What type of market we're in? That's a pretty important indicator that we need to understand, like where we are, and then how we calculate it is based on the month of inventory. So you're seeing here, so on average, let's say like all TREB, right? Like we're looking at City of Toronto, Houtan, Peel, York, Durham, King Township. When we look at it, everything is roughly around 5 month of inventory. So what does that mean? Like balance market is 2 to 4, and anything above 4 months in GTA is essentially we're in the buyer's market. All right, so and that kind of shows it like this number. So we look at the City of Toronto, we are 5 months buyer market. Look at it here, we are 34% sales to new listings ratio. So what did we say? We said anything under 40%, that means we're in a buyer's market, and that shows it here. Halton region, 4.6%. It's not as bad as Toronto, but we're still in buyer's market. And then York region, Peel region, 5.5%, right? So, and then York region is 3.7%. So essentially, we're looking at it here. Looks like York region and Durham region are doing slightly better than the other regions, because we're like they're below 4 months, and you can see here Durham region is at 43% sales to new listings ratio, and York region is at 38.8%. So you can see here overall, right, as we're like towards like the between balance and buyer's market, right? So that shows that we're still in buyer's market in essentially majority of the regions. But moving to the next slide, just again, just kind of like gauging and comparing different regions and how they're doing, and in terms of average prices, city of Toronto, and this is again, this is condos, townhouses, semis, and detached. So overall, everything we're seeing that city of Toronto's average price February 26 $1,019,000, York region $1,133,000. Again, because York region and Houtan region, you're seeing why you're seeing a higher average price than city of Toronto is because there are overall like a lot of bigger houses, right? You don't find that many micro condos, you don't find that many smaller 15-foot, 20-foot townhomes in city of Toronto, and those are bring the average price down, right? When you average everything out, so that's what's happening. And then days on the market, we're looking at it like you can see essentially like all of them are pretty much the same, but then like Simcoe County is pretty much not doing well at all, right? Like 56 days on the market average, which is quite a bit, right? And in terms of the new listings, City of Toronto has the most new listings. Again, it's just because it's the biggest region. You got the biggest number of properties, right? Uh, but when you're looking at overall comparing it, right? So Simcoe and Peel are doing the worst in terms of like their 7.9 months in deep buyer's market, right? And then strongest market are Durham and York region. So let's move on to slide 6. So what's driving this market, right? So again, so one of the things is that we're seeing that the bank rates, right? So prime rates is at 4.5%, hasn't really changed much from January. So still some buyers are waiting to see what can they do, right? How if they're waiting, essentially waiting around and seeing if they can get a better price or get a better rate, so then they can jump into the market. 5 year six still at like 6.9%. It's quite elevated. Other thing is the important part is the Toronto unemployment, right? It's at 7.9%, right? It's elevated and it's dampening buyer's market essentially, right? And so that's one thing that is causing a lot of delay in buyer's decision. We have CPI inflation at 2.3%, right? And that's pretty much stays flat year over year. And then again, like real GDP growth in Q4 2025, economy contracted, and we got the data recently. Again, a lot of it is sentiment and psychology, right? When you see, oh, GDP is doing worse or economy is not doing well, then people get a little bit scared and spooked, and they don't want to make the biggest decisions of their life, right? Just to summary again why buyers are doing what they're doing according to TREP, we have it here, right? GDP contraction is spooking buyers. Trade war uncertainty and US tariff. Rates are down, but not enough, right? So we're seeing that still rates needs to be coming down more to make buyers jump into the market. So one thing is the future signal, new listings dropping, right? So that kind of like a positive way in terms of like holding the price steady. Maybe not for buyers that are waiting so long. They thought that we're going to see an influx of listings coming in. We may still see it in March and April, but right now the trend from January to February doesn't show that, right? Because you're seeing new listings fell 17.7% year over year, right? And then another thing that TREP is mentioning is like the missing middle crisis, right? TREP CEO called on federal provincial government to enable more missing middle construction, so then people can get into the market. You can buy these like duplexes and fourplexes. A lot of them are like they're making it as a condominium, right? Or like a condo townhouses, so you can buy like a small unit each. And then the other thing that TREP is mentioning is the pent-up demand building, right? So the chief information officer, Jason Merson, noted that 100,000 plus buyers are on the sideline. And when trade clarity and price stability arrive, the market could see explosive in second quarter of 2026. So Let's talk about how to position yourself in this market, right? So that's an important thing that we need to uh, we're studying all these data and stats to figure out how to positioning ourselves. So if you're a buyer, this is the best market in 4+ years, right? Sales to new listing ratios are down at 33.6%, and we have 5 months of inventory. That means that you do have a real negotiation power. Average days on the market are 54 days. Homes are sitting. Again, you have more time to do due diligence, to put conditions and all sort of stuff. The average sales to listing ratio is 97%. So on average, buyers are getting homes 3% below list. And again, that means that buyers are negotiating more. Detached and semi-detached prices are 7 to 8% below last year. So if you're a buyer, family home for the long term, values are down $75 to $100,000 from peak. So you have more opportunity. Condos, again, you got to be a bit cautious on condos, right? Condo market has extra supply and the weakest demand. Pre-construction inventory is also flooding the resale market, which we're seeing that rent is coming down, average prices are coming down because we're just getting a lot of supply in the condo market. Durham and York offer the best combination of price and stability and fastest moving markets and the lower inventory. One suggestion is lock in your mortgage pre-approval now. If rates dip further in 2026, you can refinance, but if the market turns, you're going to be ready. If you're a seller, price correctly is everything right now. Overpriced homes are sitting 54 days and often they have to relist, which is, again, that kills the buyer's confidence in your listing. Your competition is high, 19,000 active listing across GTA, and then presentation, pricing, and marketing needs to be elite. If you can wait, waiting may pay off, right? Trap also projects Q2 2026 could be stronger momentum once trade clarity arrives and buyers off the sideline. We're going to see some negotiations happening with the Kuzma, so if everything moves well, we're going to see more confidence into the market. If you must sell now, consider pricing or at slightly below the market to generate multiple offer scenario rather than sitting for 60 days. Condos are the hardest sell right now. If you're a condo owner, be realistic. Prices are down 8.12% year over year, and investors and flippers are also dumping units. So again, like we're seeing that condos are definitely hard to sell right now. So you gotta be priced super competitively and do all the presentation that you need to do. New listings intentions are also falling 17% year over year. So less competition for sellers who are in the market. So your competition is shrinking, which is a good news, right? We're seeing year over year listings are dropping. We saw from January to February listings drop. So that shows that your competition is getting less. If you're an investor, condo investors are under real pressure. You have negative cash flow, high rates, and falling prices create a triple squeeze, and the exit is painful right now. If you're holding a rental condo and cash flow is manageable, then hold on to it. The fundamental, which is like immigration and housing shortage, haven't really changed. Right now, we're just at the down cycle, right? The best opportunity may be in distressed sellers and slash motivated sellers in the condo spaces because prices, we said, are down 8 to 12%. And that's like an entry points for like patient investors. Missing middle townhomes, stack towns, multiplexes is where TREP and government is focusing on, and this could outperform long term. So Durham region detached homes are at $850,000, right? And then we have a 3.5 month of inventory, which is most balanced market for investors. And watch the pricing for 2026 market closely. If listings stay low and buyers re-enter, price could move up quickly. Buy before that shift. So we have, and then again, pre-construction caution. Many units closing now are coming in below assignment value. Do the math on new closing carefully. Next slide, we have slide 8, right? So market prediction, spring, fall. So based on the February 2026 data and the broader macro economy, right? Here's what the data is telling us. And again, this is not a financial advice. This is just like based on my research, based on the TREB research. We're just putting everything together and I'm trying to presenting to you. Spring 2026, we're going to have a slow start. Again, we're going to have trade uncertainty and the GDP contraction will keep buyers cautious. Prices are likely flat to slightly down. New listings may stay low and preventing a crash also. It could, like, because of the new listings are coming down, it could prevent a crash. And I expect a soft market, not a collapse. The biggest risk, we're looking at the prolonged US tariff war that could damage the Canadian economy further. That is definitely the biggest risk. And if unemployment rises above 9% in Toronto, demand will collapse regardless of like if the rates come down to zero. This is the bear case and it's real, right? What do we see in summer 2026? Potential turning point if the US trade tensions ease and Bank of Canada holds or cuts rate further. We're going to probably have a pent-up demand of 100,000 plus and of buyers, and then they could re-enter fast. Volume could spike sharply and prices may begin recovering. The biggest opportunity in summertime, buying a quality detached semi-townhouse in Durham, York or suburban 905 now, where prices are down 7.9% year over year and competition is low. The fundamentals, immigration and supply shortage, still favor long-term appreciation. In the fall, TREP projects strong Q2 momentum if trade clarity arrives. That pent-up demand of buyers entering a market with still low inventory, that means the competitive bidding returns. Buyers who wait too long may miss the window and prices could recover 5 to 8%. And then we have the federal election. A change in government housing policy could unlock supply, right? That's what we need to watch. And then we could possibly have a stimulated demand. It's the first time home buyer saving account changes, all that stuff that could happen in the new budget. And then we'll need to watch the political calendar as it could shift this market meaningfully. All right, that was the February 2026 market breakdown. If you found this video helpful, drop a like and subscribe. I do this every month when the TREP numbers come out. Also, if you have questions on what areas you're watching, are you buying, selling, or holding, let me know in the comments and I read all of them. You can also call me or send me a text and we can have a free consultation. See you next month.